Good evening. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 25th of June. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. Okay, looking at ES, the 60-minute sell signal that was fixed, that was brewing this morning has fixed and hasn't made target yet. I was noting that we had a number of 15-minute sell signals. One of them failed today, and that was in Q. One of them made target, and that was on IWM, and we've got two still outstanding. Here, we've just got a 60-minute sell signal on ES. We didn't have one on NQ in the end because we lost the divergence. We did have one on RTY, and that made target. And on YM, we don't have any negative divergence here. I wasn't looking for a great deal in the way of retracement. I'm thinking we might well see another day. We will see how that goes. But I think I'm liking a little more retracements consolidation, just to clear the negative divergence and then likely higher. Although I do have more to say about this on the daily charts. Now, sorry, on the bigger picture charts. Okay, looking at DAX and ESTX, as I mentioned on Sunday, we are still below the monthly pivots. Now, it's not actually the monthly pivot for much longer. It's only the monthly pivot until Monday night. But nonetheless, this is actually an important one to see. If we can't break back above there, then this is a potential point of weakness. And that's one thing I did want to address today. All right, let's have a look at the bigger picture charts. Now, I'm just looking at the short-term patterns here. Now, what I would like to see here is a conviction breakup. That might be a little difficult short-term without some consolidation. The daily bands haven't really started expanding yet. We are rising, and obviously this all we've seen here. We've had a very steep rise in the daily middle band here. We've seen a back test here. We've seen a back test here. So far, it's held like a champ. We're back up at the daily upper band, and there's nothing really standing between SPX and a retest to high, which is something I've been talking about for a while and looking forward to. Now, one thing to mention though, well, let's actually have a look at the daily charts first. So Qs, we've actually retested the all-time high already. It's the first to do so. I would note that we've got weak RSI 14 sell signals fixed on SPX and the Qs. Not taking a lot of notice on those, but I would like to see it head up with more power, certainly over the short-term patterns, which I'll be coming to. Dia, we've made a higher high, looking higher. So obviously this was the weakest, and actually spent 3 or 4 days underneath the daily middle band here at the bottom of the last retracement. So I'm a little concerned, but actually let's do IWM first. But and here we're coming back, retesting the high, and again held the daily middle band like a champ. This is one where it's held. It's been more of a rough hold each time, but it has held. We've got this was a gap below it, then closed back on it. This was an intraday move below, an intraday move below. So I mean, it's been holding as support. I would like to see that continue. But obviously, you can see from today's daily candle, we obviously had some weakness here today, and that's why the sell signals on RTY and IWM are the ones that have already made target. Now, what are my concerns about this chart? Well, obviously, I'd like to see them go higher. We've got this IHS here. I'd quite like to see this at least attempt to play out, and so I'd like to see a new high with some confidence here. But I'm looking at these short-term charts, and I do have some concerns. I'm just going to mention those because they're worth bearing in mind. Okay, looking at the pattern from the April low. I've redrawn the trend lines here. Easier to see on the hourly chart, really, I guess. But I've redrawn the trend lines here, and hang on. Sorry, it's been doing this. Just changes windows for no particular reason. Not quite sure. Probably a bug I should chase down like an idle minute. But let's have a look and see on this. Now, here I am assuming it's going to go higher. So I'm repositioning the trend line so it goes through the new retracement low. And I am changing things slightly to adjust to the obvious trend line. This is the trend line that I would like to see break, because as long as it holds, there is a risk that all we've done is slightly expand the original rising wedge, and we've still got a rising wedge where we're only just under resistance. Now, could we? And we could still be in a rising wedge if we went up and retested the high and then fell back down, because that could be a bearish overthrow. So that is my concern here. So I've been looking at the short-term charts, and I have been assessing what I think of those. On the Qs, again, there's a very nice looking rising wedge. It's really, really not bad. I would like to see some damage done to the upside to weaken that. Otherwise, it's possible that we've got a pattern set up which could just turn around. I was saying, and I'd said in a few bigger pictures, that I would really like to see a move where we had broken all the original rising support trend lines so that we could make more longer term trend lines for the larger patterns. What I would prefer is that these aren't the larger patterns. And that these are just a way station onto bigger patterns above. On Dia, again, looking at it, it's worryingly nice. So I would like to see basically some damage done to the upside. Now, if we do see a high form here, I think we're going to see some more moving sideways. We've obviously got a series of potential level tops here, but we'd start seeing some hourly sell signals. But I'm just saying that it's a bit like double tops. I often say that just because a price is being retested, it doesn't mean it's a double top. But it doesn't mean it isn't a double top. And my concern is that we've got a whole load of double tops forming here, and they're quite nice. We've got, I'd like to see it push through, so these are much less likely to become double tops. So we'll see how that develops, but that was just a concern that I wanted to mention. Okay, looking at the IWM chart, we've got, moving on to DAX, we're still testing the daily middle band, and obviously this is while we're testing the monthly pivot from below as well. We've not seen any kind of a breakup on the Europeans. Now, the Europeans have actually been outperforming the US indices all year, so maybe it's time that they have a little time to downside. We do still have a weak RSI 14 sell signal fixed, and that hasn't made target yet. Looking at Nikkei, sorry, I was just doing that again. All right, looking at Nikkei, I've actually redrawn this. I think this is actually a bull flag, and it's just broken up. So I think, on the bull scenario here, where IWM heads up and retests the all-time high there, I think it's perfectly reasonable to expect that Nikkei is going to go up and retest that high there at 42.4. And I think that looks like, it's so spiky, I really didn't think it was a pattern, but actually I think it is, and it's not a bad pattern. And it's broken up, and I think that's got a target at the highs. But again, I'd like to see it make tracks in that direction. I think we've probably got another day's retracement on equities. We've got a whole holiday week next week, and I'm thinking this is a good opportunity to do some damage to the upside, and I'm hoping to see that happen. Let's see how that goes. All right, DX. DX, I'm actually writing a big post on this on the bigger picture. Possibly a little wordy for some of you, because it's going to be a reference post for any future ones that I do. So I'm just basically giving a full picture of the current situation. And watch out for that, because it will be interesting. But in the short term, what I'm looking at is a potential nested double bottom here, which could lead to a reversal back up. But basically, I'm writing a post about where we are exactly on this inflection point, and what happens if we break up, and what happens if we break down directly. And where I see the overall pattern setup. So here, we've got a weak 60-minute buy signal fixed. We've got a potential little double bottom here. This is resistance on a larger double bottom. So let's have a look at those on the bigger picture charts. Not a lot to see on the other charts here. We've got Euro, we've got a potential double top, although it's heading up a bit higher there now. And the weak 60-minute sell signal has actually now fixed since I was capping charts earlier. We've got a potential level top here, but again, it's extending higher at the moment. But these all retested their highs. And these both retested their highs at a point where the dollar hadn't actually retested the low yet. I think mainly because of the action on the yen. Yen, not entirely sure what's happening here, to be honest, but I think some kind of a pattern is forming. not fairly neutral in direction. USD CAD, nothing obvious in terms of a reversal pattern forming here. Australian dollar, probably going to retest the high. NZ, probably also going to retest the high. Not too far away from those in either case. All right, let's have a look at the big picture charts. Okay, US dollar. On the monthly chart, I've drawn in some extra notes here. I'm using this as the central chart where I'm explaining what the bigger picture is. But really, what the bigger picture is, we've got this rising wedge from the 2008, a rising megaphone from the 2008 low. I'm expecting this in due course to pretty good odds. It's a bear flag. And the bear flag, in due course, I was thinking over the next few years we would break down from the rising megaphone and bibble on down to the target, which should actually be a retest of the 2008 low at 70.7. Now, actually, this isn't anything to do with Trump or the administration or any president, really. This is what I was expecting to happen over the next decade or so anyway. It wouldn't necessarily have happened. It's just the most obvious thing to happen. Looking at just the structure and the patterns on the chart, and over a long time, this is a chart that patterns very well indeed. And you can see these are long, slow. It's a bit like, I don't know, it's just large and presidential terms generally in terms of this sort of chart, and more of a blip than anything else. But I do wonder if Trump might have an impact on this. So the obvious sequence here is we've got a bull flag here. This would head up. The 70% option is that the bull flag would break up. We'd go off and make target at a retest of 114.78, and then that would probably be the second high of a double top. Now, that would depend on whether we had tested or broken down below this support here. If we see a slight break below flag support, then that's probably just a bullish underthrow. But what I would say is these break up 70% of the time, and that does mean that they break down 30% of the time. Now, if this breaks down, and this is rarer, normally I'd be thinking we test the high, set up a double top, possibly a head and shoulders, and then come down. If this breaks down directly, and it might do because this is rather a reckless administration and they're not really doing the dollar any favors, and certainly next year, I mean, one thing to remember about Powell is it's great that he's in and he's still independent, but his term runs out next May. April or May, I think. And what are the odds that Trump's not going to appoint a loyalist to the Fed position who will do whatever he says? Well, I think the odds of him doing that are actually exceptionally high, in which case we're going to have a loss of confidence in the dollar and bonds. And that can have big effects. And one of the effects could be that this could break down. As it is, I don't think we're going to need to wait that long. We'll probably see a breakdown pretty fast. Now, we've seen if we are going to see that. Now, we saw a strong move down from this January high, and everyone was saying that was to do with Trump, and maybe it was partially, but kind of was the obvious next move anyway. So I'm not convinced that really had anything to do with Trump. And I think while I think he is guilty of causing a lot of economic damage, I don't think this is necessarily much to do with him at all. But I am thinking that policy over expectations of Trump policy might mean that we don't see this high retest and we break down directly. Now, that would be the lower probability option, but it does happen 30% of the time. And when that happens, if the break is sustained, then the bull flag itself becomes the topping pattern. You don't have to look for a topping pattern before because you've got the bull flag, and that would break down in this particular instance with a target in about the 80 area. Which is obviously a long way on the way to the ultimate target of the larger bear flag megaphone that we'd be breaking down, which has a target in the 70.7 area. So I'm leaning towards, well, this is a big inflection point, which is why I'm doing the post tomorrow, and I've got it half written already. A big decision needs to be made here. Could it be that this process that likely would have happened anyway over the next few years might just get accelerated by government policy and happen faster? Yeah, maybe. I'm not really used to considering government policy as part of the US dollar direction. I mean, there are elements of it. I mean, this here was a big political agreement and financial agreement in the Plaza Accord in 1985. This was an agreement reached to devalue the dollar. And obviously you can see it was a stunning success. But I mean, obviously we're not looking at deliberate action like that, although Trump has talked about the Plaza Accord and how it might be a good thing to have it. But actually Trump really wants the dollar down. I don't think he's going to do anything particularly to defend it. I am wondering if that increases the likelihood of a breakdown. So I'm keeping a close eye on risk, whichever way it goes. On the weekly chart, what I was looking for here after we hit the flag support was I was wondering about a bounce, which we saw. Then I was wondering about a low retest, which we've seen. That means that we've got a possible RSI 14 buy signal brewing and a possible RSI 5 buy signal brewing. Now, looking back over the last 20 years or so, these have a really good track record of making target. Having said that, they sometimes take a bit of a winding road to get there, but nonetheless, once you see the breakup here on a weekly closing basis over this level here or this level here, then there's a very high expectation you're going to make it up into at least the 62, 66 area and very probably the 70 area, which it usually would. That is the move that would get us back into flag resistance, which I've got currently in the 109 area, and a break above that would set up a target in the 114.78 area. So is this looking like it might deliver? Yeah, it is. This is a potential double bottom. It's nice. It's a potential nested double bottom because we would break up from this level here. This would have a target in about the what would that be? 102 area. And then a sustained breakup over 101.98. That would take us back, I think, up into the 104 area. No, actually, it's more like the 106 area. So we shall see. It's but that actually gets us a long way back, and a lot of the way back to flag resistance. So this is the thing I'm watching. Now, if this breaks up, then I will give the benefit of the doubt to the pattern, which is a bullish pattern. And it could do that. And honestly, I've seen some pretty wild retests, and I've seen some pretty wild retests on dollar in the past. We could see that retest. I don't quite see the reason for it, but I think the pattern is more important than the reason. A lot of the reasons you see on the financial programs are just rationalizations. They're just taking things that are happening and the way prices are moving, and they're winding them together into a coherent narrative. I'm not convinced a lot of those are anything more than soothing noise. Appealing to the monkey part of us, which likes to have an explanation for anything and prefers an explanation, even if it's wrong, to a mystery. We'll see how that goes, but that's what I'm watching. Now, on the bigger picture charts, looking at the euro, what are we seeing there? We have a falling wedge here. It's broken up, and we've got, this is the main difference here is that we've got a rising megaphone. We've got a rising megaphone, so it's opening outwards. On the euro, it's narrowing, so we've got a wedge and we've got a bear flag. That's overthrowing slightly here. That could be a bearish overthrow, and this could take us back into a retest below. We've got the same on GBP. Another falling wedge, another bear flag, another slight break above. This is a setup which is this is a bigger picture bullish setup on both euro and GBP, and short term this is a bearish setup indicating a probable retest to the low. We'll see whether we'll get that low retest. If we don't get that low retest, then the dollar's likely to fall directly, and GBP and euro will go up directly. We will see. All right, great. I think that's it for the currencies. So let's have a look at bonds. Okay, CB, we've come back up. We've retested the high. We've got a potential level top here. I was looking at the charts for this carefully today. We've got a potential rising megaphone here. It's a little choppy. We've got a possible weak 6-minute sell signal brewing, and I'm waiting to see if we retest this resistance. Let's have a look at the bigger picture charts. Okay, let's have a look at TYX. TYX leaning towards this looking like a bull flag heading higher, which would mean that bonds would in due course be heading lower. On TNX, not got a strong opinion, noting that it broke down, the yields broke down below the daily middle band today. Looking at the hourly charts, that's still on daily. Hang on. Looking at the hourly charts, this looks like a falling wedge, and I'm wondering about a reversal back up and a test of this high here at 46.29. Looking at TLT, again, this looks like a rising wedge, which would be the inverse of what we're seeing on TNX. And this is suggesting that we're going to break down from this and head lower. So I'm still thinking the read on bonds is likely that yields are going up and bonds going down soon on the pattern setup. Policy, I'm not sure that matters at the moment. I think it would matter a lot if the chairman of the Federal Reserve was fired. I think beyond that, I think we're waiting for tariffs, inflation, a host of other factors which will be arriving over the next few months, and we will see. But I think my feeling is there'll probably be fairly strong pressure keeping rates high until things have clarified a lot. We will see. And when Trump talks about, oh, well, the Europeans have cut rates 5 times, they're not raising their tariffs. They're not raising their own inflation by raising their own prices. The central banks do not have concerns about the policies of their own governments undermining their efforts. So that is the reason why it's happened. Also, the other thing is, I made a point in November last year when I did a big post about the dollar. I said at the time, I think the expectation was that the Fed was going to be reducing rates 0.5% or something, and I was saying that the problem with doing that was that interest rates, yields were probably going to go up anyway, bond yields, and every time they did that, cut in one direction, it went in the other. The problem with that was that it it made more hard to sustain the polite fiction than actually the Fed sets interest rates, which they don't. Interest rates in practical terms, as you see on loans, as you see on mortgage rates, that all comes from the bond markets and yields on the bond markets. So actually, the Fed cut rates then, and interest rates went up 1%. I watched it, and actually, I wasn't surprised. And actually, most of the market participants weren't that surprised either. Trump would have been surprised. He seems to think that if the Fed would just do what he was told, then the interest rate being paid by the U.S. government on the vast amount of U.S. debt would go down by up to $1 trillion a year. He wants to see interest rates at 1 to 2%. That's really not going to happen. And the fact is, even if he puts a Trump puppet into the Fed chair, and even if the market accepts that and the bond market accepts that, it's still not going to happen because that's just not the way it works. We'll see how that goes, but I think that is a misunderstanding which is going to cause more trouble down the line. All right, CL, amazingly, we had this flash in the pan. We had the US enter the war on the side of Israel at the moment, and initially we had a ceasefire which didn't appear to be a ceasefire, and now it is a ceasefire. I think it's going to be interesting to see what the long-term effects of this actually are, and whether or not this actually has retarded the Iranian nuclear program or accelerated it. But I think in practical terms, we'd already reached a point where we were likely to see more nuclear proliferation because the Europeans are going to be looking to increase their nuclear capacity, and Japan's going to be looking around at possibly getting nuclear weapons now. South Korea is. Everyone that was expecting the Americans to support them and now is wondering if they would, is going to want nuclear weapons, and then others will want nuclear weapons as well. And if Iran is getting nuclear weapons, then Saudi's going to want nuclear weapons, and then maybe even Qatar, who the hell knows. But I think we're going to see, in 10 or 15 years, I think we're going to see an awful lot more nuclear weapons, and chances are that was going to happen anyway. The world is getting more dangerous. The US has been the biggest economy and dominant for a long time since the Cold War, and the reality is, just because of economic shifts, that was changing anyway. Trump's accelerated that, but he didn't start it, and chances are this was coming anyway. So we'll see how that goes. In terms of the oil price, I've never seen a reaction like this to something like this. In war in the Middle East, big strikes, Trump talking about regime change and all this sort of stuff. I'm amazed that prices come down this far, but maybe on a price point of view, it was just a flash in the pan. We'll see. In terms of has it come down to where it came from, well, it was in this pattern here, really. So it's basically come and back tested it. But I'm not seeing an awful lot of short-term reason for this to go up. HO hasn't quite got back to where it was, but it's pretty close. It's back tested effectively, and natural gas is now coming back into the range where it was. Sorry, not natural gas, gasoline. We've got a couple of 60-minute bicycles fixed on RBOB and HO. We've got another one on CL. We've seen a tiny bit of rally today, but I think if the danger has really passed and we're going to be seeing peace breaking out in the Middle East, then actually I don't see why these need to be up here. Oil can actually just resume what it was doing before, which was flirting with dropping considerably lower. All right, looking at NQ. talking about flirting with going considerably lower. I was saying that I was expecting a rally to probably resolve into coming down again, and here we are. I was looking at trendline targets in the 415 or 425 areas. We stopped in the 415 area and we came down. We had head and shoulders, had a target for 3.45. We've hit that this morning, and it's coming down with a target in the 330 area, which is a retest of this low because this is a bear flag wedge. So after that, well, not seeing much reason to think it won't go lower. We'll see. I mean, we are going to start seeing a bit of a pickup in some demand for air conditioning, but really, summer doesn't tend to be the best time for natural gas prices. And let's have a look at the bigger picture, because I have to say the charts aren't particularly encouraging for that either. If we are having a look at the bigger picture charts here, we have seen a failed breakup. We had a double bottom here. It broke up. Now, having said that, this hasn't necessarily failed. Maybe it's just seeing a long period of consolidation before it heads up and makes that target. But at the moment, I'm not seeing much reason to think that it would. I do think economic activity is slowing down. It's likely to slow down further, and that's not going to be great for natural gas prices. So we'll see. At the moment, it's still holding the monthly middle band on natural gas. That's a big level. I've got that at 2.86. And we will see whether that continues to hold. If it does, then maybe, just maybe, we will be going to seeing more action on the upside. But if we don't, then chances are we're going to head lower. This isn't much of a head and shoulders. I was looking at that, and really, I don't particularly like it, which is why I haven't got it marked in. It's even uglier at this scale. In terms of what this is here, I'm thinking this is probably a flag. This is move, rally, return. I'm expecting to see a retest of this low, which actually on the continuous chart would be at 2.86, and then very possibly continuation down. A, B, C. So I think this was a rally wave in between two impulses. We will see how that goes, but I wouldn't be at all surprised to see this go lower, and I'm not seeing anything really suggest it's going to go higher. In terms of oil, we actually made it slightly over my channel resistance and broke the channel, and returning back to the lows. We've broken back below the daily middle band. This is a pretty solid move. We obviously broke below the 200 DMA, 68.50. We're still above, or at least testing the 50 DMA. But I am wondering whether we're going to break below that as well and just head lower. As long as we're staying below the daily middle band, that's my lean is this is likely to resolve lower. In terms of this falling wedge, this could just be, of course, a retest the low, setting up a double bottom. I'll keep an open mind. There is a lot of geopolitical stuff that happens with oil, and obviously, as we've seen with Iran in the last week, this can cause some very strange activity on the prices that can sometimes persist for a long time and then sometimes just fade away. We shall see. All right, looking at heating oil, potential double bottom broken up. Could just be a retracement, but at the moment I'm not seeing much reason to think this is just a bullish retracement before it heads higher. I suspect this is probably rejecting back into the lows. We will see. Gas oil, again, we had, well, actually, this kind of looks like, this did look like a bear flag, possible larger bear flag channel, and it's broken up a bit. Not really seeing a supporting trend line for this, but of course, unless this is a channel, I'm pretty sure it's a wedge. Then of course this could be a bearish overthrow, and this could be a bear flag setting up a retest of this low. We will see how it goes, but I wouldn't be that surprised to see them head up to the lows from here. All right, let's have a look at GC. GC, we've still got a flag, we've still got a target back up at the retest of the all-time high, and we still haven't managed it even with the Iraq crisis, which has disappeared too fast for gold. So on SI, we've been trying to break down here with the target in around the 34 area, but no progress so far. We've been trying to break down for a couple of days. Palladium, this looks as though it's heading back up to the high, and it's just retested the high. On platinum, we've gone significantly higher. Platinum is on a hell of a tear at the moment. And on copper, leaning towards seeing a retest this high and then wondering if that might be a double top. Although, honestly, this action's a bit slow and boring. and isn't really giving a strong pointer in any direction. Bigger picture, though, I suspect this is heading down. All right, let's have a look at the bigger picture on there. And looking at gold first, we're back below the daily middle band, which is disappointing. I was hoping it would hold it and head back to the high, and I really thought this Iran thing would get us that high retest, but it hasn't yet. Could this be forming an alternate bull flag, which could be larger? Yes, that does happen sometimes. And actually, I'll draw that for you if there would be an ideal one here already. If we were to do that, chances are this is the trend line we would head for. I'm actually just going to do that in purple and leave it on the chart, but I'm going to make it small and put gaps in it. But if we were forming a larger bull flag, then that's what it might look like. Would it be a channel? No, it wouldn't. It would be a megaphone. But we do have a really obvious trend line that it would be heading for, and it would be here. Do I think there's compelling reason to think it's going to go there? At this stage, not really. But I am wondering about it, and I'll be wondering more about it if we actually break that trend line there. But we'll see how that goes. I'm not seeing anything really compelling saying that we're going to do that, but I'm going to leave it on the chart just as a sketch in the dust of what could be happening here if we do see more of a decline. Is there much sign of that decline? Not really. We haven't reached the ideal targets really on silver, although we do have an RSI 5 sell signal fixed and an RSI 14 sell signal fixed on silver at the moment. The obvious target really is up here. Could this be an overthrow of a rising wedge? Potentially, yes. I'd prefer it wasn't. I'd really like to see it make this 39 area, which is a very obvious target, and I think it might make it anyway. We will see. Looking at palladium, really, I think I need to make this chart an awful lot smaller for it to make any sense. But really, these are just on the bigger picture of what this kind of price action we used to see on palladium. We've really just been bumping along the bottom in the sediment recently. So platinum, not so much. We had this long consolidation lasted a couple of years, and we have torn up from that. We've now retested this high here at 1336.50, and we've gone above it. Could this be part of a larger bear flag? Yes. Where would the obvious target for that bear flag be? I've worked that out before. I was reckoning that would be the 1450 area. We might be making that soon, and we're getting also pretty close to the 50% retracement of this move down from 2290 to 558. I'm delighted to see this happening on platinum. This could still be part of a large bear flag. Looking at the bigger picture charts on those, we've got an RSI 14 sell signal fixed on the daily platinum. We've got a weak RSI 5 sell signal fixed and a full size RSI 5 sell signal brewing. Looking at palladium, nothing as exciting as that happening on the palladium chart, which has been an awful lot more muted. Looking at copper, no divergences. What's really happening on the patterns here? I don't know, it's hard to say. I am wondering if we might retest this high here at 5.04 and then break down in a double top towards these lows. We will see how that goes. GDX, we've got a little double top here trying to break down. This isn't the sort of pattern which would be supporting a significant move down on gold. Here, it doesn't look quite like a double top. No divergence really at the moment. Keeping an open mind. I am thinking we might consolidate for a bit more here, but I would like to see this make a new all-time high soon on gold and head up to the 9039 area on silver. All right, let's have a look at the other commodities. Let's have a look at the softs and the grains and the meats. Okay, KC, we broke below. We've been flirting with making it to my support trend line for a few days, and then we broke below it this morning. Could this be a bullish underthrow? Yes, it definitely could. Watching this with great interest. As you can see, the action's been getting here more spiky. We broke this declining resistance trend line. This is potential bottoming action. So I'm watching this with interest. We've already got a 60-minute buy signal fixed. As you can see, it's not really delivered a great deal so far. Sugar. I'm wondering when this might be the original falling wedge and this was a bullish underthrow. It's flirting with breaking over wedge resistance here. If it does, chances are I'll just delete this trend line and go with the original one. It hasn't expanded lower so far. We'll see how that goes. Do I see an obvious reversal pattern here now? No. I'd be wondering about another retest of the low or an IHS forming. I do have a possible IHS neckline up here, in about the 17.05 area. Looking at CC, bit of a rally here, bigger picture, leaning towards seeing at least to retest this low, possible continuation lower. CT, we broke up from this falling wedge. Sorry, I'll just put that in thick trend lines now because I think that's confirmed. We broke up from this. We had a double bottom. That's made target. At the moment, it's failing at the monthly pivot. That's only the monthly pivot until Monday night, of course. But nonetheless, I'm wondering about that. We shall see. All right, looking at lumber. Lumber, we've got still got the same rising megaphone forming. I'm still thinking that is a bear flag, and at the moment we haven't made it back to megaphone support. On wheat, I drew in a possible overall megaphone here, and we've hit support and we've broken it slightly. I'm wondering if this is going to break down further. We've got a possible 60-minute buy signal brewing on corn. We've got a 60-minute buy signal fixed on soy. We did have possible buy signal brewing here, but we lost it. And we broke down from this megaphone, and it wasn't a flag, but it's very, very close to making that target anyway. And I'm wondering if that's what's going to happen on ZW. The technical target is actually on these kind of megaphones to go back and retest the lows. It often doesn't make that target, but often it does. Okay. So at the moment, I'm wondering about more further lows on soy and wheat. Corn, I'm not seeing much reason for optimism on the upside at the moment. It's just continuing down. We shall see. On soybean oil, which has been holding up better than soy, I'm still thinking this may well be a bear flag forming, setting up another leg down, maybe a test of the monthly pivot at 49.18. On live cattle, we've got what looks like a bull flag forming, and lean hogs, keeping an open mind what's happening here. The overall rising wedge is looking pretty good. Price action just seems to have stopped the last few days. Maybe it's waiting till it reaches the rising support, which is currently at about the 109.7 area, I think. So we shall see. All right, great. Let's have a look at those on the bigger picture charts. And looking at coffee. Okay, coffee is a very overbought by current standards. I did draw in possible flag support here, and we're breaking down slightly below it. If this is a bull flag, then this needs to be a bullish underthrow, and it would reverse soon. Do we have positive divergence? Yes. Got a possible RSI 14 buy signal brewing on the daily. Got a possible RSI 5 buy signal brewing on the daily. We've got a decent amount of positive divergence. Nothing on the weeklies, but if we do see a reversal back here, it'll be strongly well supported by divergence. Looking at sugar, we're still breaking down from this head and shoulders, which is this head and shoulders, and I'm not seeing anything compelling saying this is about to turn. We've got no divergence on the weekly. On the daily chart, got a little bit of very weak positive divergence here on the RSI 14, but really nothing to suggest that. The main thing I'm wary about on sugar is this head and shoulder target, which I've got in the 6.5 to 9 area. That's a reason not to be long. So we'll see. All right, looking at cocoa. Cocoa has broken down below this trend line and broken down further. I'm keeping an open mind. No current positive divergence. No obvious pattern setup that this is conforming to with an obvious target, so we'll see. Looking at wheat, we have broken down. I'm wondering at this stage about a possible retest of this low here at 499, and then maybe to do the retest of this low here at 49550 that we never did, and when we made this low. All right, looking at corn. Corn, we had an RSI 5 buy signal fixed, and that's failed. We've headed down lower, and I'm wondering about a retest of this low here at 385. I've been drawing this as a bear flag for ages. I've been thinking for one reason or another that corn might head up anyway, but it looks like it's heading down to this target, so I'm expecting it to reach 385. Looking at soybeans, on the bigger picture, we've got a falling wedge, and that's now broken up slightly. Which is interesting. On the chart here, we never quite made it to the flag resistance I was looking at, but of course, I've also drawn this as a possible bear flag. And if it is a bear flag, then it could be breaking down towards a retest this low here in the 936.06 area. Cotton, smaller picture. We're breaking up from a small rising wedge, but we haven't yet broken up from the main rising wedge, which is the one down from the 22 high. I've got this up in about the 70 area, and I'm wondering if we might be heading there soon. But really, we're going to have to speed up on this very, very slow action that's been happening here. And if you notice here on the weekly chart, this is, I think, 6 weeks where we've been basically trading slightly under the weekly middle band. If we're going to make progress to the upside, it's got to get over it. All right, looking at lumber. Lumber looks like a bear flag on the bigger picture. On the smaller picture, no current divergence, and we've got a little rising wedge breaking down. I am wondering if we can break below daily middle band, whether we might actually start seeing some downside. All right, great. In that case, I think it's a wrap. I will catch you guys again on Sunday, and everyone take care.